you can see in the range, down to here. Order block is in the middle, literally at equilibrium of the range, right? Let's see how it plays out. Comes in, plays around, taps in, and then we go. Right, starts falling, beautiful. What's going on, family? It's your boy Romz. Welcome back to the channel. We're gonna get straight into it. So today it's another trade breakdown and just a market breakdown. Today is the Wednesday, the 15th of February, the day after Valentine's Day. And I'm gonna break down, a trade that I took this morning on the London session where I was actually wrong. I still made 1R, I was aiming for 5, but I still made 1R, but I was actually wrong on my bias. And I'm gonna explain why I was wrong and what actually played out and what I missed and how I could have picked up a really decent, really good trade actually. So stay tuned and let's dive straight in. All right, so we've got EURUSD here. This is the weekly time frame. I've already clicked on replay mode and I've started it back to this morning, so the beginning of London session, so 7 a.m. UK time, or say 2 a.m. Eastern time. Right, so we can see here, this is the weekly time frame. You can see from the weekly, we're header bearish, but we've been bullish or recent on the daily, and we've come down into a key area now because we've hit this weekly order block, right? So we've hit this weekly order block. You can see that this order block has also taken out some lows, and now we're in it, right? So see what happens from here. We could bounce down from here and keep going higher to take out this high and keep going. You can see that we've tapped into this order block here, and you can see what happens. But if we go down to the daily time frame, again, you can see more now, right? I guess things get a little bit more clear in the sense that obviously we're still bullish in regards to the daily, but now we're on a retracement back into this potential daily order block here, right? So we've had a reaction from the weekly order block that I pointed out. I'm gonna show you again. So weekly order block, tapped into it, we're way into it now. You can see now we're going into the wick of this weekly order block, the weekly sweep. And within that wick, you can see you've got a daily order block here and a sweep of a few lows down here on this daily wick, right? So go down again. We know that there's room for more downside in the sense that we've not hit the daily order block yet, where the sweep happened, and we've got this massive imbalance in this zone here, which I'm going to mark out just for ease so we can see what's happening. Of course, the gray box is imbalance, and yesterday we had CPI. So with CPI yesterday, so first of all, if we look at the premium range of this 4-hour time frame, you can see that it mitigated something over to the left. I'm not going into that right now, but just looking at this price action here, you can see we've had a sweep of liquidity, and this is the typical ICT YouTube model kind of say entry trigger, should I say, but price action. When you see the sweep of liquidity plus the market structure shift, right? So we haven't come back up into premium yet into this range, as in from here to here. We're still in the discount zone, so we could potentially look for buys, but we know that we've got this discount PD array in the form of this fair value gap and this daily order block. So we can have lower prices. What happened yesterday though? So yesterday we had CPI, right? And you can see in the 4 hours straight away that we had a massive whipsaw in CPI. And what actually happened was price swept this low, this high, sorry, and this high, right? Both these highs got swept. For ease, I'm going to just mark out one high. So I'm going to mark out this high just for ease. But what is key about this is that it actually tapped into this low right here, which is known as the breaker. So this is the breaker that it tapped into just here, the final down candle before the move is made to take liquidity up here, right? So it taps into this breaker. I'm gonna mark that out and tap it out. Right, so had the breaker, it's tapped into the breaker, and because it's done that, and we've got this wick that swept liquidity. Whenever there's a trap, okay, whenever there's a sweep of liquidity, typically you want to trade away from the sweep of liquidity, typically, okay? So if we go down to the 1 hour time frame, we can see that we swept this liquidity, this high, we swept this high, and we've tapped into the breaker. And we had an aggressive push down after that, right? So what we're looking at now, so now we're looking at this, and we can go down for another time frame to the 15-minute. We know the breaker's been tapped, we know the liquidity's been swept. What did I just say? You want to trade away from the liquidity. So what you can say here is, you know, you've had this sweep of liquidity and you had the market structure shift. Yeah. So again, 15-minute, you've had the market structure shift here. And then you had price action come back down, and it's gone back up into, you know, the rejection block, or into these wicks, these buy side wicks from CPI, right? But this is when that gets interesting, because this is, I'm going to explain my point of view and what I was seeing this morning and why I took the buy initially. I'm going to tell you why it didn't work out in regards to hitting my targets. It actually went out to 3R. I didn't take any partials, but I mean my stop loss into profit, so it gave me 1R. But what I was looking for at this point was, you know, I seen that we had the sweep of this high yesterday. We had the market structure shift, okay, just here, and we've seen that, you know, price has moved back up, and then again another low has been made here when price came lower again, right? But my eyes were then looking at these equal highs. Okay, this is what I was looking at, and I'm going to show you why I was wrong and why I should have been looking for sells, but I'll get there. So this is just the imbalance that I was looking at the time. I was looking at these equal highs, right? And I'm gonna explain why I took the buy, right? So if we go down to the 5-minute, right, this blue box, right, and with the yellow line in the middle, this marks out the Asian range. So it's the Asian high and the Asian low, right? So as I mentioned, I was looking at these equal highs. I wanted to get a buy from down here to take out these highs, to then get a sell from this imbalance zone up here on the 15-minute, and, you know, take out the highs, a sweep of this liquidity to then come lower into these lows down here. Okay, but let me show you how it actually played out. So if I go down to the 5-minute, if I just go across back up, all cool. So we had the Asian low taken, and then we had, there we go, cool. Down to the 1 minute now. Cool, so we was having this price action, right? If we go back to the 15-minute, sorry, let me go to the left, you can see that there, you know, you can look at this zone here. Probably you can go a bit even on the 5. Let's have a look. So I'm just gonna mark out the breaker on the 5-minute. Right, let's just call it all of this. Just call it all of that, right? So that's the breaker, because, you know, it's the last, you know, candle before it went down to take liquidity. Call out the breaker, okay? So we tapped into the breaker, right? And that's the range. And then, you know, but it's not just about where we've tapped into, it's also about the timing. This is the beginning of the London kill zone, right? So 2 a.m. Eastern, or 7 a.m. my time in the UK. And I'm going to explain what I was thinking, what I was seeing, right? So we tapped into the breaker. It's London open. We've taken out the Asia low, all right? So, you know, at 7 a.m. or 2 a.m. Eastern, you typically do get this kind of aggressive move, and often you can pull up and move from it, right? So I saw this. I was like, okay, this is pretty much my entry model. Sweep of liquidity, market structure shift, and I enter. There are some other things that I look for, but in regards to like liquidity and things like that, but that's basically the basis of it. It's the same as the ICT YouTube model, right? That's why I learned it from good old ICT. So if I just forward through this, and I'm going to explain my thinking. Cool. Great. So if we look at this now, and if we go down to get some more, yeah, cool, right? So what actually happened was sweep of liquidity, market structure shift, and then here what we've got is, break this down for you guys, we've actually got this rejection block. All right, so you've got the wick of the sweep. So you have this rejection block, okay? So this wick, price comes back up, back down aggressively to tap into it, okay? in doing this, it sweeps liquidity. That's the purpose. Okay, so it's engineered liquidity, it swept it, and then we made another high. So once that happens now, I'm like, oh, cool, like this, for me, this is definitely enough of a confirmation for me to enter the trade. See, if I go back for a second, when we're at this point, see, what I like to see before I enter a trade is some liquidity to take into my entry. If you've seen any of my last video, you see that I had liquidity to take before I took the sell, right? There's no liquidity here, so there's no real inducement, or there's no liquidity to take, right? So I was like, oh, it's not that, it's on A1 setup, but let me just enter. So I pretty much literally just came down to the 50% into discount level, and I just set my stop loss. It was about a 6.5 pip stop loss, I believe, something like that. And I was like, I'm just gonna enter. If I'm honest, it wasn't a great entry. I'm still learning, still developing, but it's what I did anyway, right? So I entered, and let me talk you through it as it played out, right? Because my stop loss almost got clapped. Came down aggressive. When I saw this, I was like, Lord have mercy, we're gonna get clapped. Anyway, came down. Boom, look how close this is to my stop loss, man. Look how close this is, and then it didn't get taken out. But then I saw this, I was like, okay, cool. I think I'm in the money now. So what we've got here again is the same entry signal, entry model as here. The sweep of liquidity market structure shift on the second time frame. I'm gonna quickly break this down for you guys so you can quickly just see it on a second time frame. You see it? So you got the low, high sweep of liquidity, market structure shift. This is the market is fractal, right? And this is what you get on every single time frame. So when I saw this, I was like, okay, cool. So if we're gonna keep going, then this low will definitely hold. If we're not gonna keep going, and I'm wrong, it means I'm wrong, and I'm wrong. It is what it is, right? But this low didn't get taken. This low held, which was beautiful, and then this low should have held, and it did, right? So I saw this 15-second time frame entry model, and you can see here the rest of this imbalance was then also filled, right? So now that this imbalance was filled, we had the 15-second time frame. I was in this trade, and I was like, okay, cool. So now I was like looking at this, thinking, these highs up here should now get ran. You had this build up of liquidity. This is the first place where it should get ran, and then once it gets above these highs, I'll look at starting to reduce my risk, and we'll see what happens, right? Understanding that it can still come lower into this area, or wherever. So if I play on a bit more, as you can see, it came lower again. It respected this high, came lower again. The way I see this, came down to again just sweep, do that liquidity, and again on the 5-minute. I don't know if it is or isn't. Let's have a look. Okay, not quite the rejection block, but 15 maybe. No, it's not actually. Cool, all good. So it came back lower, took out this low, and then we started moving higher, right? Cool, great. So these highs got taken. So that's when I was like, okay, cool. So hopefully now we should start to see, I'm on a 5-minute, start to see price going higher and take out these equal highs. It's an obvious target into this 15-minute imbalance. On the 5-minute, it's a lot smaller. On the 15-minute, it's a lot larger. I'm going to show you again, 15-minute imbalance zone, and then we can try and find an entry model to sell off from here, bang, back down, right? Easy up there, 5.42R, easy win, right? At this point, I thought this was gonna make it all the way. So let's see what happens from here on. Go back to the 1-minute. I was gonna fly through this because I don't like making these videos too long, but cool. We'll talk you through this again. Right, as price started going higher, I then believed that this would act as an order block, right? This is the order block, and this would hold price, and it did. I've actually got a live video of me taking this trade. I might put it up on YouTube so you guys can just learn, because I talk through it as I'm trading as well. So yeah, acted as an order block, and it did hold price initially. Held price, and price respected this order block and just kept going, right? So I was like, cool, we're looking good. If we keep going, and this is where the problems lie. Right. Cool. Let me go back a second because it was here. This is where I thought something was wrong. All right. Because I was looking at this. This is my thought process. I'm looking at this. I see. This is the way I see it. I see this low swept, this low held, but this low swept, and then the market structure shift. And I saw, this as internal liquidity on a 1 minute time frame. This is me having my bias as bullish still, right? And I see this as imbalance to be filled still. So maybe it could come down and it could just keep going higher again because it swept liquidity internally to take out the late buyers and then keep going up into my target, right? But one thing I noticed is that if I keep going, cool. So it tapped up, it broke up, sorry, here, and I was like, okay, cool. But then we had that reaction, this reaction. Didn't want to see that at all. Price coming down like this. Didn't want to see that at all. It should have kept going from here if we're going to keep going higher. But then what I did was, let me zoom out. So I went to the 15 minute. I said, oh, this doesn't look good. And then I went into the 5 minute, and then it all hit me. Right, then I look to my left and I see, okay, just because this is Asian session, just because it's relatively equal highs, it doesn't mean that it's definitely going to get taken. I know this, but I thought that, this would be a high probable target. But the way that the market moved, this trade, I was in it for pretty much like, let's have a look. 3 hours. That's a long time for that kind of trade. That trade should be done within an hour. It should have been an aggressive move up, and it wasn't. It was choppy, it was horrible. I knew something was wrong. So then I was looking, I see that the price has tapped into this high. I respected it. I had this imbalance fill on the 5 minute. Right, but then here's the biggest thing. If I delete this for a second, what we've got here is the fact that if we're going to the 15 minute, this right here, this order block, this thing here, this is just an order block on a high time frame, right? These 3 candles, 1, 2, 3, these 3 candles, right? So when price came up, tapped into these wicks, came back down, created a new low down here, and it's come back up, and it's come up into the consequent encroachment of the body, which it did here and again here. There's no need for it to go any higher. But then I noticed we're going to 5 minute. It's like, price had actually taken out this high internally, create a market structure shift here, and guess what? It's lined up with perfectly. Price literally tapped into hit during that session while I was trading it, and this is where it rejected from, the breaker. So this is the breaker. It tapped into the breaker here, and it began rejecting. So it was at this point now when I really sussed it, and I was like, okay, I'm closing out everything on. I'm actually moving my stop loss to this low here, just here, and I was like, okay, I'm gonna take out my close my trade at least 1 hour, and we'll take it from there, right? But I'm gonna also show you what you could have done to get into the sell. I didn't take the sell. I should have, but I didn't. Is what it is. But look what happens here. So I've already explained that we're on the higher time frame, or at least on the 1 hour. Look, we sold off. We've got this daily bullish order block to tap into. We haven't tapped into it yet. And then we've got the sweep up here. So we're trading away from the trap. We're trading away from the liquidity sweep to take out these lows ideally, right? To trade down into the daily order block. We are now back into the premium area of the range. Back onto the 5 minute. you can see that price taps into the breaker here, and then comes down, and then price comes back up, fills the imbalance just here. I'm gonna take a second. Fills the imbalance here, and then it rejects again, right? So this is the failed swing. So this is actually a great entry, another great entry model that you can take, that I should have taken, but I didn't, like I said. And it breaks down, right? Again, cool. So on the 5 minute, you see now this now potentially would be an order block. So if price is bearish, then this should hold. So you could have entered on open, stop loss just above the high. Let's just call it 7.2 pips, half a pip to add on for spread. All right, I'm gonna just move this over a second. So first target could have easily have been this low for 1 to 3. Second target could be down into these lows if you wanted to, for 1 to 9, or if you want to be a bit more conservative, then at least maybe just like a 1 to 5 here, or just leave a runner to these lows, right? But you can see here, even for like a 1 to 5, you can see what happens. If we go down to the 5 minute again, acts as the order block. If we tap it, if we go in, tap in, and go out to the 1 minute, so you can see the price action. So you can see in the range down to here, order block is in the middle, literally at equilibrium of the range, right? So that plan plays out, comes in, plays around, taps in, and then we go. Right, starts falling, beautiful. Look at that, look at that. Look at the wicks rejecting off the order block. Absolutely beautiful. So then we go, look, 1 to 5 smashed. And if we keep holding, it might even take me up until now. I'm recording this now. Yep, there we go. What time is it now? 12:20 Eastern. It's about 20 past 5 now in the evening here in the UK. See, at this point, yeah, you would have hit at least a 1 to 7 if you held this trade. Because you would have, for me, I would have been holding this trade to these lows at least for 1 to 9. Not the whole trade. I would have taken like a huge chunk off. I would have taken 25% at 1 to 3, and a huge chunk at 1 to 5, 1 to 6, if I'm honest, and then leaving the runner to take out these lows. But so how this plays out. But yeah, that's the trade breakdown. Hopefully you guys learned from that. If you've got any questions, just drop it in the comments. Don't forget to like and subscribe. Hit me up on Instagram, and I'll catch you all soon. God bless.